This is not visible. Is it visible?
Yes, ma'am.
Yeah. See, in previous class regarding admission, I said, I just in 5 minutes I'll recall. In admission, you are supposed to open calculating the new population ratio and sacrificing ratio. As I mentioned, when question is given very simple way, you can the old ratio itself becomes the sacrificing ratio also. Okay, and then with that sacrificing ratio only you distribute the goodwill. The next, for the adjustments relating to the assets and liabilities, we prepare the revaluation account. Okay, and then we after that with all the adjustments whatever the partners gets or the adjustments which are relating to the partners, we will prepare the partners capital account. After that, bank account, because new partner is coming and he is bringing his capital and goodwill, so our bank balance will change, so bank account. Finally, we prepare the new balance sheet with the new capital balances of the partners and with the changed values of the assets and liabilities. Okay, we prepare the new balance sheet. So revaluation account we prepare. uh, this is the basic format. If you remember, this will be easy in any of one you remember. Yes, ma. This is the format. According to this format you go on doing it. So blindly you can do half the marks at least you can score, whatever the difficulty, not 3/4 marks also you can score. Okay, see, remember what is this drawings. Interest on drawings, they would say goodwill drawn by the old partners. Okay, whatever the capital that new partner, the goodwill new partner brings, that is generally to be shared among the old partners. So that, okay. Uh, the next one is if a profit and loss account appears on the credit liability side in the question balance sheet, we take it on the debit side. And revaluation balance opposite of the revaluation account. In revaluation account, if you are getting on the debit side, we will show it on the credit side of partner. If you are getting it the closing value on the credit side, we'll take it on the debit side of partner's capital account. Coming to the partner's capital account, credit side, balance drawdown, which is to be taken from the question balance sheet capital balances of old partners, and bank, that is for the new partner's capital, including the goodwill and capital. Okay, and then general reserve, which is given in the question balance sheet, that is to be distributed old partners. And goodwill, this is the goodwill brought in by the new partner. So on credit side in old partners, in their sacrificing ratio we show. Debit side in new partners capital account will show the total goodwill given to the old partners. Then sees see capital new partners. And this one is if any goodwill appearing in the question balance sheet. If a goodwill is appearing in the question balance sheet, that is to be distributed among the partners. In any interest on capital partners is getting. And profit and loss account balance on liability side, we'll take it on the credit side. Revaluation, that I already said. And the difference of both. Generally, sometimes you'll give if any partner brings other than the new partner, if any partner is getting the new capital, that also will take. Then finding the differences, finding the closing balance, that is the capital balances at the end of the year. So whatever you get by doing this partners capital account, those capital balances to be taken in the new balance sheet. Now coming to the what to call new balance sheet. What is this? Okay, I not explain that. New balance sheet with the adjustments, all changes. If any value increased, add that increased value to the question balance sheet value. If any value decrease, decrease that value from the question balance sheet value. But whatever you are taken in the question, partners capital like goodwill, general reserve, profit and loss account, whatever you are taken in the partners capital account, those again don't take in the new balance sheet. Okay, even new partners hold capital balances also not to be taken. That's why it's simple to remember the values that are taken from the question balance sheet to old partners capital account should not be taken or repeated in the new balance sheet. And bank account supposed to be prepared. Bank account, how do you prepare the bank account? Bank is being a asset, debit side will take the uh, we will take debit side bank balance which is given in the question balance sheet. Okay, so to balance brought on, so whatever question balance sheet value of the bank account. Okay, then uh, two new partners capital account. If new partner is C's capital account. Capital and goodwill brought, ch- brought in by new partner. Okay, that amount to be taken. And here, if any withdrawals by the new partner. Okay, basically these are the things you get. Hmm, balance carried down. If any partner withdraw any balance, then partner capital account for any amount. Are you children there following?
Yes, ma'am.
Yeah. And the day we stopped the departmental accounts, right? It's disconnected. Means we were there for a long time, so link disconnected. Partner capital account, any partner other than new, any old partner brings in capital. Okay, so this is what capital bank account. Then we open the new balance sheet. So that will now I want to tell you before leaving that partnership accounts, retirement and death of a partner. That is the another small one. Retirement and death of a partner. So this how what is the difference between? I'll tell you. So listen to it. Okay, see the retirement of a partner. In retirement of the partnership, all the partners will take the anything that is there in the business will be taken over. Okay, understood? All the partners. So here also we prepare evaluation account, we prepare partners capital account, we prepare new balance sheet and bank account if any required. Okay. So how do you do this now? See, revaluation preparation is as it is. Only the thing, in retirement or death of the partner, you will distribute the revaluation balance to all the partners. Understood? So, what is the difference? Preparation of revaluation is same. Only one difference here: you distribute the revaluation profit or loss only to old partners, but in retirement you distribute to all the partners that are there in the question. Okay. Now coming to the partners capital account, here again you will prepare everything. The only the difference here in the partners capital account is, for all the partners, generally here balance carried on we will write now. In equation including the new partner, we write balance carried on. But in case of retirement, we write balance carried on only to the old means continuing partners. Whoever the partner is retiring or died, for that we close the account. He died or he is leaving the firm, so we know his balance will not be continued in the firm. So we are either supposed to be return him, or we will ask him to collect it later, right? So the only this particular part will change. Rest all remain same. One or two may come additionally. Okay, there is a very small difference in admission and retirement of a partner. I'll repeat and I'll show you again by in present also. Let us keep this. What is this? Partnership, retirement, or death. So, what are the changes that I am doing? You might be having this with you, right? Admission one. So, you please, when I'm explaining now in the admission copy, you please circulate wherever differences are coming, so that you can take again the printout from my original copy. Partnership, retirement, or death of a partner. So, what is the difference? You again here also question balance with adjustments, and the information that the partner is retiring will be given to you, and you are supposed to calculate new profit sharing ratio, and here new profit sharing ratio and gaining ratio. Why gaining? In there there you calculate sacrificing ratio. In admission, here you will calculate gaining ratio, because one partner is going, you have a three apples with you, and one of your friend left without taking that, or means you're going to get or you are going to get three apples. One of your friends left before you get those apples. So what happens? Those three you only will share. So you are gaining one apple extra, right? So that's how here in retirement or death you will have a gaining ratio, because of that particular partners leaving. The existing partners or continuing partners are going to get a benefit in for the future in the future. So it's going to be a gaining ratio. Now after that, calculating the goodwill. Here who will give goodwill to whom? Goodwill here in admission, new partner pay to old partners. Okay, whereas because of his admission, old partners are sacrificing their share. That's why he's compensating. Whereas in this retirement or death, as because of that partner leaving the firm or left the firm, these partners are gaining. So it is reverse. Can anyone tell who gives the to whom? Who pay goodwill to whom? This is admission. Now in retirement, can anyone guess?
New one partner pay to
There is
old.
no new partner only. There is no retirement. No, all are old. One is retiring. Who pay to whom?
You, ma'am.
No, continuing partners. Whoever the partners continuing pay to the retiring partner. Okay, whoever the partner is retiring, to that partner, the partners continuing will pay, because of this partner's retirement, this continuing partners are getting gaining, right? These continuing partners are gaining. That is the reason why this, because till that time that partner was there in the part of their business, because of him also they may be making the profits. So, and he, after his retirement, they are the one who is going to share the profits. His share also they are only going to take. So, but the efforts made by the partner retiring till the date, they give the goodwill. Understood? See, mm, how I can. Did you understood this? An institute is there where accountancy, advanced accounts, company accounts, income tax are telling. Majority of students are coming for income tax. So the whatever till that date institute is running because of the income tax subject. Okay, so the because of income tax, other two subject teachers also getting the benefit. But when income tax leaves, till that may or may not come, because the benefits they enjoyed till the income tax was there, right? So when that income tax is leaving, some goodwill they are supposed to pay. Did you got it this way? Respond ma.
Yes, ma'am.
Continuing partners pay to the retiring partner. Remember this. Okay. After that, we will calculate the revaluation account. We will prepare the revaluation account as usual. How we prepare for the admission, same. Only the thing, in admission you distribute to only old partners. Here, all partners, including retiring partner, in old ratio only. Okay, we distribute to all partners including retiring partner in old ratio only, because he is also the part of the business. So we will include him also in retirement. Okay, after that, partners capital account. In this partners capital account, the same thing will come, only few changes. Balance brought down, all partners given in the question balance sheet. See, whatever I'm making changes, do this. So here, all partners. So here, this will not be there. This won't be there because there is no new partner. It's only all partners retirement. Next, general reserve, old ratio to all partners. To all partners. There we gave only to old partners. Okay, so that means C also will take. C అంటే ఇక్కడ ఇది వేరే ఎగ్జాంపుల్ అమ్మా, మళ్ళీ ఆ ఎగ్జాంపుల్ నుంచి తీసుకోకండి. ఇక్కడ పీక్యూలను పెట్టినా
Yes, ma'am.
okay. Next, goodwill. Goodwill that is given in the quotient balance sheet
Ma'am,
to
tell me
all
once again, ma'am.
Amma.
Tell me once again, please, ma'am.
Sorry.
మళ్ళీ ఇంకొకసారి ఎక్స్ప్లెయిన్ చేయండి మ్యామ్.
Okay. See, partner's capital account, in retirement or death of the partner, this balance brought down capital, what is this balance brought down is what capitals of the partners that are given in the question balance sheet. So all three partners balances will be given to you in the question, you take as it is. Okay. The next, general reserve. If in question balance sheet, if you find the general reserve, that is to be distributed among the old ratio to all the partners, all PQR. Okay. After that, if any goodwill given in the question balance sheet, that also to all partners in profit sharing ratio. All partners. Okay. In retirement or death, you will distribute it to every partner. Understood? Okay. All partners. C is capital. Here in the
Yes,
now
ma'am.
this goodwill. This goodwill is relating to the sorry, B, P and Q. P, if R is retiring, P and Q capital account. Here, what ratio will be there? Gaining ratio. In gaining ratio, to the retiring partner will pay. So PQ are continuing. Assume that PQ are continuing. R is retiring. So to R, P and Q will pay in the gaining ratio. So here what we will write? R capital paid to retiring partner. Retiring partner. So in how much each P and Q paid, that amount will show here. Okay. So opposite in admission to whatever we showed, that is opposite here. Okay, see, I'll repeat once again this particular adjustment relating to the goodwill. Huh. In this retirement or admission, whoever the partner is leaving, that partner will take. Okay. So whatever they are increasing their capital, that we take on the credit side. So who is taking the goodwill? R is taking goodwill. So for only R will write on the credit side. Okay. R is taking the goodwill, so only for R will write on the credit side. From whom he is getting? From P and Q. So in particulars we write P and Q capital. He is getting, R is getting the goodwill. So in our capital, R column, we'll write the goodwill amount. And in particulars, what you will write? Put a question. R is getting goodwill from whom? P and Q. So P and Q capital you will write. Now coming to the debit side, P and Q's capital balance is reducing. So we take it in the P and Q's capital balance. Whatever, why it is reducing? Because they paid goodwill to the R. So so in particulars column, R capital we will write because R is retiring, and P and Q are paying to the R, so their capitals are reducing. So in P and Q capital balances will take. Understood? I'll explain with the
Yes,
example
ma'am.
also.
Yes, ma'am.
Huh. Okay. The next one is, this is as usual. Whatever I said, if profit and loss account is appearing in the question balance sheet asset side, take it and distribute to all the partners. Okay. Old ratio to all partners in the sense including retiring or death partner. Okay. And now coming, actually we should call as a deceased. Now this one, same profit and loss account appearing on the liability side of question balance sheet to all partners in old ratio. Okay. If it is on a liability side, all the partners. On credit side, if it is appearing in the asset side of question balance sheet, debit side will take and distribute to all the partners. Next one is revaluation. Revaluation, as mentioned earlier, same thing. Yeah, if you are getting the revaluation closing balance on debit side, then that is to be taken on the credit side to all the partners. Okay, all, not old, because we will include retiring partner also there till that time, so we will give to him. Okay, the next. If it is coming on the credit side, the closing balance is coming on the credit side of revaluation account, then we take it on the debit side. We will take it all to all the partners. Okay, next one. If any interest on capital, including all the partners will get. Interest on capital, we will calculate to all the partners in the rate of interest to all partners in on capital balance given in question at the rate of interest given in adjustments. Okay, ella cheyali, how to do also I'm telling you. With this help you are working. So you can use your common sense and can do also. Okay, so interest on capital, if asked to calculate, so generally we calculate to all the partners, that is including the retiring partner. Upon what, how to calculate? Whatever the capital balance given in the question, upon that, the interest rate, whatever is given in the adjustment, we calculate, and whatever you get the amount, that is to be taken here. Understood? Next, drawings. Drawings again, uh, all the partners, whoever the partner is drawing. Okay. How do you calculate the interest on drawings? Drawings of each partner into interest rate given in question into 6 by 12. This is how you are supposed to take. Okay, say for example, drawings of P given as 1200, rate of interest is 6. Then 1200 into 6 by 100 into 6 by 12. That's how you should take. For example, R equals to drawings. Our drawings, say for example, 1200, and rate of interest is given as a 6%. That means 600 into 6 by 12. So how much you will get for our rate of interest? Only one I'm showing. The whatever I mentioned here, the same thing I explained with the example. So for R, how much you get? R's drawings 1200, rate of interest 6 by 100, and time 6 by 12. This is common to everyone. 6 by 100, 6 by 12 is common to every partner. Only the thing, amount of drawings differs partners to partner. Whatever the amount of drawing, this has to be deferred. Okay, this will change. This remains as it is, common. Okay, so yeah, 600 here, 6 by 12. 12, 12 cancel, 100 cancel. 6 into 6, 36. Rate of interest is 36. Like that, you should calculate. Okay, the rest is same. Finding the balance. I said in this, the difference is that here balancing figure, balance carried on only for, you will write balance carried on only for continuing partners. Okay, whoever the partners are continuing, only for them their balances will be difference will be calculated and the difference amount will be taken. But for the old partner, sorry, retiring partner, we write bank account or loan account or legal head account. To whom it comes? To our retiring partner, whoever is retiring. See, because he is retiring, leaving the firm. So, whatever the amount he has to get, that amount he will take and retire. So, his account is not going to be continued in future. That's the reason why we write bank account. If you pay, if the firm pays immediately. Say, for example, if nothing is specified in the question, then we should write loan account because firm is not paying now and it is transferred his account to the loan. Understood? In case of death, if a partner died, then we write legal hire. Instead of loan, we write legal hire. So legal hire will come only in case of death of a partner because he died. Who will take? He cannot take now. So his immediate wife, son, whoever are there legally, that person will take. So in case of death of the partner, if death of the partner is given, you should write legal hire or bank account. No, legal hire only. In all the situations, we write a legal hire only. In case of retirement of a partner, bank or loan account. Understood? Okay. Now coming to the bank account. Bank account here, what will change? New partner is, there is no new partner only. So close. Okay. Uh, Here the additionally this will come. What is that? Retiring partner capital account. When if paid immediately. Like in capital account, if you are writing, if a question says retiring partner has been paid immediately, then here you'll write bank, and here again in bank on credit side you'll write retiring partners capital account, and we'll write the balance carried on will come for the remaining partners. No. This balance calendar. The next, you will write balance sheet. New balance sheet you will prepare as it is. If here the loan account is there, so in new balance sheet, what capitals comes? Only these two continuing partners capital accounts will come, and retiring partners capital account will show as the as loan account. If it is transferred to the loan, this also has to be showed. Understood? If you paid, you will not show. If you are transferred to the loan, you will show in the balance sheet. Remember, in balance sheet, only continuing partners' capitals will come. Relating to the retiring partner, if you paid immediately, you will not take. If you transfer to the loan, you will take. In case of death, also will not come. Either you paid immediately or death of the partner will not come in the new balance sheet. But if you transfer to the loan, will come in the new balance sheet. Rest all same in the new balance sheet. How you do for the admission of a partner? Did you understood? Children, are you there?
Yeah.
Right. Shall we work out one problem, or you'll do it on your own? Shall we move on to the next one? I think this is the last class. We have one more class. I want the answer. Yeah, departmental accounts. Again, I just referred. You can do like this, or so. Shall I move on to the next topic? Will you able to do the partnership accounts now?
Yes, ma'am.
Admission, retirement, death. All the three we covered with the help of this question. New balance sheet. You want the new balance sheet? The new balance sheet. How you do? Bank with the change value. Bank with new value from account. Okay. Next, asset depreciation. With depreciation minus asset if appreciated plus appreciated value for both from revaluation account. Okay. 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 This is how we are supposed to do. Uh, if no change, take all the assets. Except P&L account, goodwill given in question. Okay. Now coming to here, any liabilities like creditors. Example I'm showing. Okay. Decreased value means if increased, okay. Anything decreased as per the revaluation, this also capitals what you will take P capital account, Q capital account from capital account closing balance, not from the old question bank question. Okay, question not from the question balance sheet. Okay, the next you are not supposed to take. Do not take. Sorry, wait. If and what about the R R loan account if not paid? Okay, R loan account paid immediately. Okay, if paid will not come. So what about the remaining things? Take unchanged items as it is from question balance sheet. Okay, but do not take general reserve because we already took P&L account. Okay, general reserve and P&L account. Okay, so your new balance sheet will get tally. Understood?
Ma'am.
So whatever the values changed, that you take as per the revaluation account. Whatever values not changed, you take as it is. Okay. But the capital accounts, you should take only continuing partners as capital balances, for retiring partner as loan if not paid. In case of death of the partner, his amount also transferred to the loan. You will write legal a loan account in case of death of the partner. Okay, if a partner died but his amount is not paid, you will write legal hire account. Okay, if partner retired but he's not paid immediately, we'll write loan account. Okay, if paid, will not come only. If paid to any of them, will not come. If not paid for retired partner, loan account will write. For death of the partner, legal has loan account will come. So one additional thing that you get in the death of the partner is okay. That if you don't know, also no problem. Let us not. So till here you understood. Shall we move on to the other one? Hire purchase is a long one. Hire purchase one sum will come in the exam. And branch accounts on previous class I said I would like to conclude that again. Departmental accounts, No, branch accounts. So we did a departmental accounts, sir. Departmental accounts we did. Branch accounts we didn't do. What do you say, said children? Shall I? Okay, not one. So I'm going with the departmental accounts once again because it is a scoring topic and easy to remember.
Excuse me, ma'am.
Yes, ma'am. Yeah, please. If you people speak out, I'll be more happy. Yeah, come on. What happened?
Ma'am,
This
let
is live.
hire purchase.
Sorry.
Hire purchase, ma'am.
Higher purchase you want?
Yes, ma'am.
Don't want the departmental stores?
No, ma'am.
Understood? Okay, very good. Okay.
Ma'am,
In
can you share
higher
the
purchase,
number?
higher purchase is more majorly with the what you call what you call journal entries. Okay, I'll show you that also. One second, I'll share the other screen.
Ma'am, can you give your number?
I'm sharing. Look at here. I'll share this document. I shared the document. Okay, higher purchase. Pay attention. Sorry, higher purchase. Is the screen visible? Come on, please. Higher purchase. Is the screen visible? Hire purchase system also simple. Uh, yeah. Here in hire purchase, what is that? First you pay the initial amount, and monthly you pay the installments. Finally, after payment of final installment, you will own the vehicle or asset, whatever the asset. Okay. So based on this concept only, you are asked to pass the journal entries. But here there are what do you have, how they pay is in this what is the method of calculating the interest, uh, because interest will be included, right? So there are three methods: asset accrual method, full cash method, interest suspense account method. So a particular journal entries based on the method will change. Okay, certain journal entries remains same. It's all about journal entries and calculating your interest. This interest based on the method, how do you calculate the interest? Okay, see here, when cost price, interest rate and hire purchase price are given. Mostly, what is this? Ah. And the next, calculation of interest based on the information given is important. See, in page 56, your study material, page 56, Question 1C. Look into that. Please turn the pages. Open your textbook. Page 56 of your study material. So in the question you have been provided cost price of the asset is 7,700. Rate of interest 10%. Because you are paying in installment, so interest will be added. So down payment or initial payment one and the same, and balance of the amount is paid in 3 equal installments. Okay, and that means here you have been provided with the cost price, interest rate. Okay, and what is the total amount? 7,700 is the total amount. Okay, and he paid 2,200, means balance how much left? Someone has to say. 7,700 cost price. He paid 2,200 initial. So balance is how much?
5,500.
Very good. 5,500. But he is paying 2,200 each month for 3 times. So how much he is paying? Total 3 installments, 2,200 each. How much? 6,600. Right? So this is the hire purchase price. This is your hire purchase price. Your balance is 5,500 only. 5,500 only, but he is paying 2,200 each installment. Like the 3 installments means 6,600 is paying. Means 1,100 extra he is paying. That is hire purchase price, which is included with interest. Now to see how to calculate. This is important. So here in this question, you have been provided cost price, interest rate, hire purchase price. Hire purchase price is each installment amount that he is paying. So how we are calculating? See, the date when he purchased that will be given to you 1st January. If you are, if not given, you assume it's the 1st January of the year beginning. And the value of asset is how much at the first year when the date of purchase? 7,700. How much he paid down payment? 2,200 he paid. Right? Down payment is 2,200. So on that year of purchase, in the beginning, he need not to pay anything. Okay. So 2,200 is initial payment itself becomes the hire purchase price. So from this 7,700, if you subtract the hire purchase price 2,200, sorry, this one, you will get 5,500. Balance amount minus down payment 5,500. The same 5,500 will be carried to the next year. Okay. 31st December 10 is nothing but 1st Jan 11. Okay. 31st December 10 is nothing but 1st Jan 11. Here you can also mention here it is. I cannot make changes, as my data is storage is full. So So in the 2011, the opening balance, your loan balance is showing 5,500. Okay. Upon 5,500, actually hire purchase every month you are paying same amount. Every month you are paying equal installment 2,200. But how much interest you are paying and how much principal you are paying, that is to be known. So upon 5,500, you calculate 10%. See here, what is the column? Column 1, column 2, column 3, column 4, 5, 6. These are the columns. See, First column I took date, second column balance brought down on first beginning of the year, third column is with the down payment or cash price paid, the fourth column is the interest paid or out, okay, and fifth column is of high purchase amount, sixth column is balance carried down, year ending balance. Are you understanding? So how here in the 2011 my balance is 5500 and I paid 2200 full amount in equal installment amount. But I want to know in this 2200 how much is my cash payment, means the initial principal amount paid and how much interest that I paid. So what I did, upon 5500 I calculated the rate of interest 10%. Then I got 550. I got 550 interest upon 5500. Actually, the interest is only 550, but I'm paying 2200. So from the 2200, from this 2200 to be subtracted from the 5500. Sorry, sorry, 550 to be subtracted. See here, the down payment column. Column 5 value minus column 4 value. So column 5 value is 2200 minus 5550. Sorry, only 550. So how much you'll get? 1650. Are you getting? So your installment amount included with the 1650 rupees of initial amount, principal amount, and 550 of interest. Okay. So now by the year ending, how much more amount you are supposed to pay to the supplier? From the 5500 minus the 1650, because your amount, actual amount, loan taken is balance, loan amount balance is 5500, but you paid 1650 only the principal amount. Your 550 is your interest, so you exclude the interest. So from the loan balance of 5500 minus the principal amount that you paid 1650. So by the year ending, the principal more you are supposed to pay is 3850. So 3850. By second year, your balance is, principal amount you are still due to the vendor is 3850. In that you are paying 2200 as a fixed amount of HRR. So now again, upon 3850, you are pending. So 10% interest you calculate. 385 you will get. So from 2200 minus this 385, you will come to know the principal that you paid. The principal amount that you paid is 1815 out of 2200. 385 is your interest. So now what is the balance left for the third year? 3850 minus this 1815. Then you'll get 2035 balance. The principal amount balance to be paid to your vendor is 2035 by the third year. Okay. So you paid 2200. Now last year, the last year payment, how you do? 2200 minus 2035. Don't calculate the interest in the last year. From the per purchase price, subtract the balance of amount left to be paid. 2200 minus 2035 balance amount paid. Whatever the difference is there, that to be taken under interest. Okay, remember in the last year, do not take interest calculation. Whatever the balance is left, that itself show under the cash price. This balance, whatever is there, that itself will show under the cash price. The difference between this and HPP, higher purchase price, whatever is there, that's going to be the interest in the last year. Okay, so by the time nil balance. So now what you do? Total cash 7,700, which should be equal with your cost price given in the question. Okay, and the interest 1,100 you paid, which should be get equal to your advance plus the higher purchase price paid for the total installments. Here 6,600 to 3 installments plus 2,200 advance. Total 8,800. Higher purchase price 8,800. It tallied. The difference between these two is going to be your interest. So everything you can understand whether you did it correct or not from the question to your solution. When you do this table, you should able to understand uh, this cost price. The cost price that you are taken here should get equal to the cost price given in the question, and higher purchase price should get equal to the down payment plus the total amount paid in the installments should equal, and the rate of interest, the difference between cost price and higher purchase price. Okay, when it is tallied with the question information, you what you did is correct, then you can proceed with the journal entries. Are you are you people there? Not understanding?
Excuse me, ma'am.
Yes.
Ma'am, sorry to interrupt the class, but we need your number.
Yeah. To give number, my number, no problem. First of all, tell me, did you understood this? Because we have these partnership accounts, whatever I gave you. Acha, I need to share this also. 1 second. Departmental accounts related, departmental accounts from the textbook model you can do. We worked out now. This document also I'll share with you. 1 second. This is my number. Okay, this document came. Partnership accounts. Did you receive it? Yes. Right. Uh, whatever the instructions, tips kind I explained you, all those, following those, immediately you take one simple question, okay, and practice it, so that you will understand how much you understood, and it fixes in your brain for the examination. So now move on to the higher purchase. Okay, when all three are given, this is the method. First, do this table, then move on to the journal entries. The next, cash paid in installments is given. See, in this question, he gave just what is the amount of cash paid. Okay, and interest rate only given. You are supposed to find the what you call higher purchase price. This is the one which you found, which are supposed to find by you. I cannot make changes in this document. So this is what you are supposed to find. Instead of for this, in previous question you are asked to find cash price paid. This amount you asked to find. Okay, because initial amount paid and higher purchase price paid for how many installments he gave. Cash paid for each installment we calculated. Whereas in this method, he asks you to find the higher purchase price. How you find higher purchase price? In the question, he gave you the value of the asset and the advance payment paid and every installment. What is the cash price paid? Okay, and interest price anyway is there. So these two you will he gave you means this he gave you. This you will calculate as usual like previous one, and by adding these two you will get the higher purchase price. Okay, for everything I gave, how do you get this calculations? So please do check. So how you get the higher purchase price? Cash price plus interest. If you do, you'll get the higher purchase price. The next one is interest rate is not given at all. This is a difficult means little from back to you will start with the different angle. This is the amount of interest paid totally. The total installments are 4, he said. Then first year you will go first year, second year, third year, fourth year. And reverse you start the ratio 4 is to 3 is to 2 is to 1. Okay. So 4 is to 3 is to 2 is to 1 total is this total is equal to 10. So first year total interest amount 60,000 into 4 by 10. Second year total interest amount into 3 by 10 because second year ratio is 3 by 10. And third year total interest amount into 2 by 10 because third year interest amount is share is 2 by 10. Fourth year is 1 by 10, 60,000 into 1 by 10. Like that, if you do, you'll get a interest paid every installment. The rest all as usual. Okay. So this how to do if only the these tables you are supposed to understand. Once you understand these table and remember journal entries, passing this is very easy because hardly in journal in the hire purchase system journal entries will be some 5 to 6. Okay, those 5 to 6 three journal entries repeats. What are those? One is for interest due, one is for hire purchase price installment paid, and one is for transferring that. Okay. Then anything more? After 1:30 line will be disconnected. I hope I made you all clear understand basics. What is not coming? I sent link. I sent.
But ma'am, it's not opening.
Why it's not opening? Ma, I took your one only. Anyone with the link, internet link, you can. See, I think you can.
Yeah, ma'am, I got it.
Hmm. Okay, hire purchase and partnership accounts I shared. Right, I'm closing. Done. You all the best. Okay, do well for examination preparation. If on the day, if you want, just you can contact. If I'm free, March 17, I'm busy. That other dates, okay, right, right, children. All the best. Do well. Take care.